Hello guys, welcome to another backtesting video. Today I'm backtesting the October's data now. I have reached October and this is the NFP week. And also one more thing. This week my bias was not clear. I will show you why my bias was not clear in the weekly bias video, obviously on the weekly breakdown video. But for now I am making a video for a trade that I've taken on Tuesday. Let me show you, let me break it down for you guys. Why I took it, why, when and where. Always before taking a trade, we have to ask ourselves where, why, where and when. If you can do these three things, you'll become a profitable trader. As we can see here, last week my bias was not clear because of something like this. Lower highs, the market went down, came up on Friday. It made sense to go down. Also the Fibonacci retracement. I have drawn the Fibonacci retracement tool from this high to this low right here because it was bearish, and the retracement happened exactly to the 50% level, which is also known as the equilibrium. And then the market was making a down move. Yeah, as we can clearly see, Monday made a huge move. On Monday my bias was not clear, so I waited patiently. These are the weeks where we wait for Monday to play out, when our bias is not clear, right? Now in this week my bias was not clear, so I waited for Monday to close, and Monday literally gave us our bias right here. Monday closed as a very bearish candle, so it only made sense for me to look for sells after something like this, after rebalancing the price here or so on and so forth. Yeah, and if I show you DXY, on DXY Monday closed exactly DXY, my bias was not clear, so I waited for Monday body closed above the previous 3 days highs, giving us an engulfing candlestick, engulfing the previous 3 days highs right here. Also swept so much of liquidity, so it made sense Tuesday to go up. So that was my reasoning for looking for buys on Tuesday. Still not one of the best trades, because my weekly bias is not yet clear. This week any trades I take will be not that high probability because my weekly bias is not clear, right? Simple as that. And on Monday we can see the previous weekly low has been swept early on, and whenever the previous weekly low is swept early on, it is a red signal, red sign or a red flag. But even though that doesn't mean that we will not trade. The previous week low has been swept. There is a supply here. We can see lower highs, lower lows, and on the 4-hour time frame it's now making a lower highs, lower lows, lower highs and lower lows. Now we will wait. As traders, our job is to wait for the lower highs and then enter at the lower highs to sell towards the downside right here, something like this. Draw the Fibonacci retracement. And if I show you the DXY, same for DXY, I'm looking for buys. So obviously if I show you the H4, the previous week high is swept early on the week on Monday. Monday was very bullish, as you can see, same as GBP USD. This is the demand zone, and if we draw the Fibonacci retracement tool from this low to this high, I am anticipating a pullback to this equilibrium level right here. So all that said, now I'm looking for buys on DXY and sells on GBP USD, right? So let me show you, let me get on the point and show you the zones that I've marked. As you can see, this was the previous day high. These zones I marked due to huge amount of liquidity right around here. Huge liquidity is resting right here. That's why I've marked those zones, right? So you can argue, bro, there was a supply zone here, and the main supply zone was here, right? Yeah, bro. The main supply zone was here, and these two can also be the supply zones, but we have to wait for the Asian range. The Asian range decides the zones that we trade. You may be marking this zone right here, this fair value gap, this zone right here, but you have to mark the closest zones to keep your charts clean, and also the markets respect the closest zones. So what I have done is clearly waited for Asian range to play out, and I have marked the most closest zone, which happens to be the hourly fair value gap. You can argue that there was a supply zone. If we trade only supply zones, this would be the supply zone that I would have marked, right? Something like this. And if I show you DXY had a beautiful demand. This trade was based on DXY. On DXY, this demand was beautiful. There was a fair value gap. There was a market structure shift right here. So everything we will see in a good order block was here. So it was a good order block. All I was waiting for was a higher low, and also the market was bullish. We anticipated this to be the higher high leg, higher low, and we enter at the higher low after the higher low is completed, right? So everything was making sense. Now what I will do, I will wait on the 15 minutes. I'll go on the 15 minutes and then go to the GBP USD. and obviously I will wait for the Asian high liquidity to get swept, because there is huge amount of liquidity here, so it doesn't make sense for the market to go here. It makes sense, it could have been a continuation setup. For it to be a continuation setup, I need the market to make a move, and then I will enter at the fair value gap, but that was not the case here. And also, if I show you the news, there was Joel's job opening on 7:30 and there was no GBP news on Tuesday. That was also one signal that I can look for a trade today, because there is no news. And all I did was, there was inducement here. Obviously inducement makes our trade even stronger, right? This trade was also I have learned one more thing here, was the 1 hour rejection candlesticks are very strong, bro. This rejection right here, this exact candle, if it comes at 1 hour, it's a very strong sign that the market is rejecting, right? On DXY, this was a demand zone, whereas it was a fair value gap on GBP USD. This fair value gap, I don't usually trade fair value gaps, but this fair value gap was aligning with DXY's demand. That is the reason I took this trade, to be honest with you. This fair value gap was aligning with DXY demand zone. That is the reason I took this trade. And also look at this rejection, bro. This hourly rejection, it's coming. This rejection is with our bias, first of all, and it's a very good rejection. Literally, it went up and the sellers come in the market, clearly showing us that sellers are interested in the market right now. And also it's rejecting on the hourly from this DXY demand on the hourly. So much, it makes so much sense to go from there. Hourly H1 rejection pin bars works very well. I've also written why I have written this, because I have seen this happens a gazillion of times. That is the reason I have marked this, written this, yeah. So everything we want to see was here. And also the risk to reward was making so much sense. 1:10, sorry, 10 pip stop loss. It was a 10 pip stop loss, could have been better, but because I'm backtesting, I'm putting 10 pips as a round figure, and pretty much the rest was history. Played out to the T. There was news on 19:30, so pretty much I targeted a 1:4. We didn't got it, but our main target would have been the Asian low, and got a 1:3. So I considered this trade as a winner trade, right? This was a winner, and pretty much this trade was also based on this demand zone right here, and also the H1 rejection. I hope you learned something from this trade breakdown. And yeah, if you follow the higher time frame bias, and if you only trade the good zones and align GBP USD with DXY, your trades will make so much sense. It will be so much higher probability, and you will win so much rather than lose. That's the secret of trading. All you gotta do is follow the higher time frames and look for entries in the lower time frames. You have to ask yourself where, when, and why. If you can answer these 3 questions, you can take the trade. So this was the breakdown of the trade. Hope you find it helpful.